Hey,
Doing good.
everybody. This is going to
Good.
be day traders versus weekend outlook, weekly outlook for September the 28th. The video we shared today was the art of discipline. That was really, really good. But I had something, I'm gonna drop this again in the chat. I had something I wanted to go over and we talked about it already. And that's using our notebook LM. And this will help you guys. This is something I found and it is really clutch, man. This is more of a learning tool, not so much that, it doesn't really have to do particularly with trading, but I'm an avid learner and I like to learn how I can learn better. And, doing that, helps me to become a better trader, a better coder, a better person, better all over, So, I told you guys, opening up um, the Notebook LM account. And I know, like, if you weren't on, Christine, like this Notebook LM is like it's a tool that you can use to create your own like chat GPT almost, and you are able to add new notebooks and new sources, and it's able to interpret those sources and pull and extract data from those, and you can use the data however you want to do it. The one we created and shared was this one about daily stoic, do the hard things every time. So we had a couple of sources here. I think I just added the source for the video we just watched, but let's say we wanted to add the source, focus on yourself. Let's see how to set up. Let's grab this one. This will, when we want to add a new source, we can either do directly from a Google Workspace, we can copy text directly into it, or we can add websites or YouTube links. We're going to go ahead and add this one. And now, mind you, I haven't watched this at all. I don't know exactly what it's about, but once we add it as a source, I can use my chat here to ask questions about the video, which is this one. And then I can also, if I
Welcome
want,
to
I can
Office of Any Work.
I can create an audio overview, video view, a mind map, reports, quizzes, flashcards, and then I can ask any questions related to any of the sources that I have that are related to this. So, and then also the video that we just added. Let me find it. So that wasn't it. Systems, this one. So we just added this video. We have a summary of it. We have the link to it. And now we also have the transcript of it as well. So we got the whole transcript. So again, we can ask questions about what we found in the video in the chat, So if we just want to see like what are the main topics from the gym systems video. We'll get first we'll get that information and all that details from that. And from this point, we can use it how we decide we want to. All right. So we had 10 most powerful morning declaration systems, control your responses, own your life and happiness. Like, so we can get details from this. If I want to do a mind map, can we do a mind map of that same content? This is just like a brief overview of some of the ways that I've been using this, but now I want to like kind of step it up a little bit. Um, I want to give you guys this additional thing. So you got to have Chrome, and you need to have you have to have Chrome to do this. And I want you to search in a search bar and look for YouTube Notebook LM extension. And it should take you to this link, and I'll just drop the link in there too in the chat. And so I kind of showed you guys like how you can use Notebook LM already, but the way that I'm about to show you this in particular will basically give you a course for any subject you want, right? Um, I'm gonna go to ICT page, right? And give me 1 second. So let's go to ICT page, right? Um, let's say this is a course, a course. This is you want to learn this. You want to go over everything, right? Inside of this particular playlist, right? You're after you add the extension, anytime you go onto any Facebook page or any YouTube video, you'll notice that you have this icon, Notebook LM, on your screen, right? And from this link, you can automatically add it to your Notebook LM. But what's cool about this is if there's like a playlist, like we just had ICT Market Maker Primer course, let's go to the playlist. And in the playlist, let me refresh the screen. Let me refresh this. Interesting. Of course, they're making me look crazy on this one, but let's go back from here. You all, where was it? Market Maker Primer. I know. I think I know what happened. I think there's a setting that was changed. Let me go to a different one.
I ignore majority of everyone.
Let's go. Let's try to find another one. Maybe he's already kind of blocked his off, but let's go try to remember. Okay, I want to use ICT because it looks like he's already disabled this feature on his. But that's cool. That's okay. Let me find a different account. So let's look at this account that we just watched this video from.
Your schedule.
General motivation. And we go to playlist, and you can already see
First of 12 price action models, and this is going to be specifically dealing with.
Hang on a second. You can already see that once we go to the page itself, we have this Notebook LM icon, right? And we go to playlist, and this playlist in particular has quite a few episodes, right? But my account only has access to make 50 sources, but we'll do it anyway. So I'm gonna go to this playlist. I don't need to play it. And then at the header of this playlist, I'm gonna create a new notebook LM based off of the entire playlist up to 50 videos because 50 sources because I have a limit on mine. I don't have the unlimited, but we're gonna go ahead and say, hey, let's create a new notebook. Please authorize. YouTube says authorize it to continue. Um, oh, let me make sure. Okay. You got permission. Hang on, you guys. Of course, this is backfiring. Well, I'm trying to do this, but it's good we ran into this though, because that way, if you guys ran into it, I can tell you how to get through it and fix it. But this is not what normally happens. So let me refresh this screen.
You ever had a day that pulled you out of bed before the alarm clock?
Yeah, it's looking like it's taking it off. So let me. No way. I think they disabled it. So, dang, okay. I think they might have disabled this, but man, I hope not. I might have to come back and try to show y'all this again.
You ever had a day that pulled you out of bed before?
Might have to go back and show this again. Okay, let me see. It's on. Yeah, extensions. Okay. Oh, this is good. Sorry, guys. I did not think this would happen. Okay, that's good. Reload.
You ever had a day that pulled you out of bed?
Okay.
Actually, I am trying to do the same thing. So I'm not getting this option notebook LM.
You gotta download. You download the extension.
Yeah, I did that.
All right. I might have to come back on this one.
Yeah, I was able to do it, but I was only able to do it for like one video, not multiple.
Yeah, I know. Um, that's what I was trying to get. Let me see. Let's see if it works this way. this is saying unauthorized. Authorized nobody allowed to continue, and I already have. Yeah, I think they blocked it. Dang. I'm gonna look back into this because so basically, let me kind of get y'all to where I was trying to get y'all to, right? So essentially, what's supposed to happen is once you guys download it and you get your extension,
You ever had a day that pulled you out of
all of the videos inside of the playlist that you see right here, all of these videos should be able to create a new notebook, and it will grab all of the videos from within that and use them as sources. So I did it right here with ICT, and I took the whole ICT 2022 mentorship, all the videos. I can see the transcript, I can see the a guide, I can see I can go back and I can do a mind map of all of the content. So if I do a mind map, once it's done,
Known for creating.
once it's done, I have pretty much all of the content. So the ICT 2022 core, trading, risk management, algorithm, these are primary concepts from those courses, from those videos. And then I can go into each section, professional views and loss drawdown. And as I get to the sections I want, I can go even deeper. I can do, go into side, like everything that's in relation to the videos. I can go in and I can like get deeper insight on that particular topic. So right now we just went over risk control and sizing, right? I just went into that particular section right here. And now it's returning all the everything from that particular section that it found within all of the sources that we have. I did the same thing for looks like I already got the charter member content, right? But same exact thing, this is all related to all of the sources within the within this channel and this particular playlist on this channel. And I was able to grab all the source material, and I can basically use this to do anything under the such. Like I can ask it questions from all of the source details. Like, I can go in and you can see over here, I think in this one, I can create an audio file, and it'll act something similar to like it'll create pretty much a podcast for me that I can be listening to, and it's all in relationship to all of the topics that we went over. So like, let me go ahead and play it a little bit.
Welcome back to the deep dive. Okay, so today we're digging into something pretty intense. You sent over this collection of sources about a very specific, very disciplined way to trade futures. We're talking NASDAQ, Q, S&P E-minis. And it's built on this radical idea, really, that the market isn't just supply and demand. It's run by an algorithm.
That's the core belief. And for you listening, our mission here is, essential. We need to boil down this quite detailed mentorship stuff. There's a lot of jargon, lots of charts, but we're pulling out the non-negotiables, the mindset, the risk management, which is huge, and the actual logic the sources claim this algorithm uses. Gold.
And so this is like essentially like you can use this to pretty much I can create video files, I can do mind maps, reports, quiz myself on the questions. I can do flashcards. I can type directly into the chat about certain topics. So like, let's say we want to talk about, can you help me understand order blocks? better. Right? And I can just ask it anything, right? And it's going to return with all the details from within all the source material that we gave it. And it's going to tell me everything we need to know about order blocks, right? So I can use this to help me like build out a better understanding of what and how I can use this to learn how to use order blocks or whatever I'm looking for that I know is in this source or I should be expected to learn out of this source. You know, and again, if you know, I mind mapped it, I can do audio, I can do videos. Here's one that I did. Let's see, I think I did it here. Here's a video that I did, and this is me going over my 415 strategy, where I was just seeing what it would give me in regards to setting what that video would look like.
All right, welcome to the Explainer. Today we're going to dive into something really cool, a system that's all about cutting through that daily market chaos. You know, the noise? It's about bringing some serious structure to your trading. So let's break down exactly how it all works. So, let me ask you something. Does this sound familiar? You've got this great long-term idea, right? You know
Let
where...
me skip a little bit.
And then we'll wrap it all up with a daily checklist that you can literally use every single day. Simple as that. All right, first things first, we absolutely need an anchor, a North Star for our trading day. You see, the entire model is built on having a high time frame directional assumption. Seriously, without this, you're just guessing. You're flying blind.
And you
So
know,
what is a high
like I
time...
said, this is just some of the things you can do with it, but like this is basically like I didn't have to make any of this. This is just like I could be watching this from anywhere I am. You know, if I'm on my phone or I'm listening in the car, I could be listening or watching this and still learning based off of whatever the subject or topic that I want to learn. In this case, this was again me going over what my 415 strategy is. This is a way I could, you know, help myself learn to reiterate that strategy or even teach it to you guys about it, you know, mind mapping everything about the models, you know, what to expect, how to go over it. If I was going to go over this with you guys about this particular strategy, this is probably a great means to consider what I would be looking at for that, you know, where inside of my strategy is the overall logic, the core principles, trading windows, the ICT concept that I use, and then daily applications and examples of those same trades where I took this and what they look like, you know. So I just thought I'd go over this, you know, even though we couldn't get the extension to work, I don't know why, but you can still create your own notebooks and then add the sources manually. Whereas if you know, if I went in individually to add the sources like we did, like if I grab the link from this particular one, I can just automatically go ahead and copy the link where I copy the link, open the source. Which one is it we use? I think this one was create a feature that pulls into use. So we'll add this one to our other notebook we already got. So we'll add that one to this one as a source. So now we added in this as a source. And now we'll get our summary, the link, and then the transcript. And now we can use this to ask anything about it. So that's kind of I wanted to go over like how to pull the whole thing in, which I thought was going to be cool. I'll figure out what's going on with that, but I just wanted to kind of start that off before I go into the charts. So I hope you got some value out of this. Sorry I didn't get you guys what I meant to show you guys, but did that kind of Like, is that something you think you guys will use? Like, I don't know.
Yeah.
Okay.
Because, I do same thing in like I save YouTube and then I make my notes, right? So I think now this is more easier.
Okay.
Everything is on laptop and you can see whenever you want.
Yeah.
Mhm.
Okay. All right, cool. Um, so we got, let's go over the news. We got pending home sale Monday. We got NFP this week. We have Tuesday, we got jobs numbers and consumer confidence. We have our ADP job numbers, PMI, bank holiday for China, unemployment, and then we got our NFP on Friday. And so we should probably be a little busy all throughout the week, with especially given the fact we got news on Monday, Tuesday, Wednesday, and Thursday, and Friday. So I think we'll have a pretty decent moves for this week because of that, since we got a lot of news. And then you know how it is on NFP week anyway. It can be a little shaky and choppy. So I'm expecting for us to have a pretty decent move. I don't know if I'll be able to get in a lot of it this week, given the fact that I'll be traveling and I do have I'll be traveling most of next week, and I got works to do. So we don't really have a lot of big news this week. I mean, I'm sorry, a lot of big earnings this week. Let me pull up those. So we should have a clean slate as far as the earning goes. Biggest name I'm seeing on our short earnings list is Nike and looks like Carnival, but nothing that's really standing out at all. So I don't know if we need to necessarily worry about earnings this week, uh, especially going into the end of our Q3 almost. We're starting to get ready to gear up for our holiday season. So I think we should have some decent runs over holiday season. We went over a couple of option setups on Wednesday, where we had Jumia already played out ahead of time, and then I'm gonna look at a couple more. I got a list of them I got a list of them that I want to look at today, and we'll go ahead and look at those charts today. I haven't had a chance to mark them up, so we're gonna be doing that together today. The first one is gonna be RIOT, right? ROIT, sorry. And RIOT is one that I've traded before. Let's go weekly. Can probably get rid of all this stuff. We took out this high. That's a good thing. On the weekly, on the monthly chart, we got this huge engulfing candle. So it looks like we might be setting up to take this 2065 out at some point soon. And again, we look at these over higher time frame moves. So with us having that huge monthly candle, it's probably not going to be something that sells off too hard overall on the higher time frame. So I'm looking at this previous month high from July as a target. So at 2065. This looks like our closest target that we need to consider. And then we also have the last week's high. On the weekly chart, we just took out this high. So of course we just took out a high. So that may give us a retracement setup. And then we got this big weekly order block right here. So I'm looking at as likely worst case scenario, we come back into the body of this candle, into this let's go ahead and draw this fair value gap out. I think if we come down We likely hold this area. So if we looking at option setups on this, I'm looking at us coming down worst case scenario, and hold somewhere inside of this, since we still seem like we're on a bullish run, and with overlap into this order block and this inversion, and then worst case, this is what we come down into. We sell off and push back up, and then I'll be targeting that high because there's our inversion right here where we have the fair value gap that should have sold off and it didn't. So there is a possibility we want to come back into this. You know, that'll be around the monthly as well.
That is a daily FVG also.
Daily FEG as well. Okay. Which we'll get down into. Yep. So, you know, it lines up with us holding this range if we do get a sell-off. So if we get a heavy sell-off, this is where I'm seeing us drop down to. If we get a lighter sell-off, and hold, I can see us holding somewhere inside of this fair value gap. And then worst case midpoint, we buy from there, target our highs over here. And you know, I also maybe if we come down and just tap the high of this weekly fair value gap, you see this little candle right here, we can use this as an order block to go and hold up right around the high. So I'm not really expecting us to like really sell off too hard on this yet. And then the other scenario is from where we close, we do have this rejection candle that, you know, it looked like it wanted to sell off. This rejection candle basically bought all the selling that right back up. And then that could carry us above this high. So we'll just need to see how we can time this. But, you know, whether we want to go ahead and buy it near the highs or whether we want to see we get a somewhat of a retracement. We do have earnings coming up kind of soon. So this is actually setting us up for what I like to see. I like to see something that's got earnings 2 or 3 weeks out, catch it on the drop, and then if we get positive earnings, it should go ahead and push us up. And I think Riot is one of those companies that already has signs that it's going to have positive earnings, projected earnings. So, and you can see even as far as the technicals go, it's already a strong buy. Analysts are saying it's a strong buy. So I'm liking this to be a good move to come up. Now, the contract we want to see. The contract we want to see is going to be here. The contract is going to be the let's find the contract. We got January 2028. That's for our long leaps. So again, for you guys that don't trade options yet, I could go on over this for a long time, but I won't. But basically, we're looking for what contract we want to purchase, right? Can do this. These are $700 for, so this is 1769 is our current price. If I'm thinking that is going to 20 and I wanted to buy this contract, that would be $730. So I don't want to buy that one. The 2027, what does that cost? Let's see.
Is it the longer, the further away ones are cheaper, and then you can always close it early, right?
Other way around. The closer it is, the cheaper it is.
Oh, gotcha. Okay.
But I like doing leaps because I like to swing them. That way I don't have to be on the charts as much. The earlier contract expiration, they're good if you want to like day trade or if you want to. So like we have it's today, Sunday the 28th. There's a October 3rd contract, which expires next Friday. Let's say we are currently at 1769, and we're saying like, oh, it could go to I think before the week over, it'll go back to 19 or 20. If it does that from where the current price is, 19, it goes to 19, that says that we would have gone 7.8% for the move from current price to 1907, right? That essentially is for one share is 7%, but you multiply this number by 10. So if we made it to 1907 by the time October 3rd is, at any point, we could take a 78.8% gain. So if we had only bought one contract at, let's say we bought the $18 contract and the $18 contract for $72. So we multiply this number by 10. So instead of it being 72 cents, it'll be $72 for one contract. So if I bought that 72-cent contract, and I'm saying that I'm going to take 100% gain, and then I'm going to close it out. 100% gain, which means that I took price to $19. At that 1947, at 1947, I will have made $72 on this same contract. So that's a 100% gain. So that means on the charts, it'll be 10% gain. But since when you buy one contract, you're buying 100 shares, right? So when you buy that, you multiply that number by 10, and that's going to give you 100% totals. If we were to actually hit our target from here, let's say between now and Friday, we hit our target at the previous month high, that'll be a 16% gain, 16.6% gain on the stock itself. But on your option calls, multiply this number by 10, that'll be 166.5% gain. And at any time between the time that you purchase the contract to the expiration date, you can close it out. You don't have to take it to the expiration date, which in most cases, you don't want to take it to the expiration date. So, I mean, if you wanted to take this early contract, it's not a bad, but I like to do leaps. So I like to do things that expire within like a couple months out, or maybe even to the max contract date. And right now the max contract date is January 28th. January 2028. But these contracts, they're a little too rich for me right now. I think even if we go to like the $30 contract, that's still 510. So that means that'll be $510, where I could buy anywhere between $510 and between $480. I could place a limit order inside of this spread to say, hey, buy my calls at this price, and then whenever I get picked up, I'll just pay whatever I get picked up at, and then I'll just wait and see if it moves in my favor,
And when it will come down, like till monthly, we are waiting for earning, right? So when it will come down, definitely this price is going to be down. From there, it will be cheaper, right?
Exactly. So as you see, if we do get our retracement like we've seen, this 510 contract might be, again, anywhere between 480 right now. 510, 480. So, or it could even go lower than 480. It just depends on how price action moves, right? But like I said, I like to see something where we got earnings coming up soon. So what I'll be looking for is we got our rejection after we took this high over here at 1875. We get a little retracement, push down into the weekly fair value gap, and then we start getting our buys somewhere inside of this range. So I'm gonna go ahead and actually put an alert out on this. And that'll be our first option call. Alert.
And one chance is like this is rejecting this order block also. Sorry, FVG also, right? Tuesday, September 16. Yeah, this one. September 16. Yeah, this one.
This small one.
Yeah, so it
That's what we
reacted
doing.
on this also, right?
Yeah, I mean that's why I said we could be also pushing up right now.
Yeah.
That's where that would be. Like if we don't come back down, it's
Mhm.
in this. And then I mean, if you want to take a higher buy, do it.
Mhm.
I don't want to necessarily.
Yeah.
I want the retracement. If I don't get the retracement, I mean maybe I'll get in for a scalp or something like that, but I don't want it. I don't
Okay.
want it unless it give me the retracement.
Mhm.
So that's gonna be what I'm looking for Riot. The contract still don't see one that I like, but let's see. Let's see what the April contract look like. April. I'll the strike price at 17.69. I want to see something above price. That's why I'm looking up here. Let's see what January is. January ain't too bad. It's $200 per. But I want to find something for you guys to get into that's a little cheaper. I'm gonna table this one. I'm gonna table the contract on this one. But let me see. Yeah, I'm gonna table which contract to get, but we'll still watch this though. So let me give you all this. I don't quite know which contract I want to get yet because they are a little more than I want to spend. Let me get rid of this. This RIOT. The next one is NIO. It's another one I looked at quite a few times. Same kind of look on this one. But in this case, we haven't taken this high out. So that looks like our draw for now. Even if we do get a retracement, I think we eventually, if we can find a good leap, we can expect for that to go ahead and take out this high. We already responding to this gap. You can see most of the price action that's holding us up here is holding because of this gap. We do have another one, and then we did react to this fair value gap and pushed up. This look a little, I don't like how this really look, but I do like, we can see on the monthly chart. See on the monthly. This is on the monthly, we looking kind of, it's just looking like it's just gonna go straight through this. Weekly. Here is this little gap right here. We could also be targeting. So I like us to take out this high and come into that gap right above this monthly high. So I think this is where we drawing toward, and you can even actually consider this whole range. Where do we hold if we do get a pullback? It looks like we hold within this gap right here. And you can really just say all of this range right here. So let's just look at this whole range. And then on the daily, that's where you want to see us either drop into a hole where we get worst case scenario down here, the monthly. And then you want to see us push up from here. And I'm looking at us to target this at least somewhere inside of this range to take out that high. If we get a shallow retracement, we come down, we hold near the middle or the high of this gap, we still go ahead and take this high out. We do got earnings coming up soon. Earnings are the 19th of November. Or we do something crazy and we just shoot up. That's the third option, right? So I'm looking for buys. Worst case scenario, we take this high out. Take this low out right here. There's our liquidity. But even if we take out this low, I'm going to show you why this is why this might even still push up, right? Because we got this low at 560. If you go in a weekly, this low is at inside of this weekly fair value gap. So even if we take this low out, it still may be just a quick snatch and go, right? So this will be Neo. Let me look and see if we got any good contracts. Neo is a little cheaper, so we should be able to find something a little cheaper for as far as the contracts go. And another thing is, once you see that it might be doing what you wanted to do, you can scale in, right? You can go, maybe you want to get one contract, see how it's looking. You see it drop again, you can, get another contract and just kind of size into the position. I like to start with the long leap. So yeah, this already looking good, right? So we're saying that if we bought now, the contract expires January 21st, 2028. Between now and January 21st, 2028, they got a $10 and a $12 contract. So I'm saying that where we are at 704 until January 2028, I'm saying that I think it could go to $10, which is here. Pretty much here. That is 42%, 42.6% gain between now and then. So does this company look like it could go between $7 and $10 and by the time we reach this expiration date? It does. So if I decided to get this contract, it'd be $241. But maybe I don't want to get that contract. Let's see what the May expiration look like. That's a sooner contract. So I can even go closer, right? I can get the $8 contract. The $8 strike price for $100. So I don't have to spend that much money on the contract because the May one looks decent. That's only $100. So I would be risking this $130 for that. If I bought this and if I got a 400% gain, that would pretty much be a $500 gain on this. So whatever, I would risk $130 to make $500. So I like this contract.
For this year, the strike price will be 8 or 10?
For this one, for the May 15th.
Yeah.
Yeah, for May 15th.
So 8, right?
Yeah, I like the $8 strike.
Okay. Mhm.
Or, you know, you don't have to get it. You can get the 12 if you think it'll, you know, the 12 looks like it's got the $10 looks like it's got a lot of volume at $10. So you can get the $10 for $90.60. That's not a bad one. But the $8 is right here. I don't mind paying that price for it. Or you get the $12 and you can pay between $73 and $69 for that one contract. But you know, either way, you know, I think that any of these would be decent. So let me screenshot this. I like the May contract on this.
But you were saying we would still hold it to 10, even though it's at $8.
No, I
No.
would just hold it till I make the percentage of the gain that I want, which is usually going to be 100%. I'm looking for 100% return. And if I don't get 100% and I'm up 60%, that might be cool with me too. You know, like I'll be okay with that, you know. So I like the May contract. Let me retake that picture because I want to make sure I circle the contract and then send it. So I like the $8. And I like, you know, I like this $10. And I'm just going to take another screenshot of this. And this will be for you guys.
Hey Corey, how come not the 7 strike when it has more volume there?
It's not in the money.
Oh,
This means that this already making money. These above here.
got it.
They
Okay.
already in profit.
Got it.
Mm-hmm. You can get them out of profit, but the thing when they're out of profit, you run the risk of somebody exercising these contracts, which
Oh,
means
so they could kind of like sell their contract and then you lose it.
and you gotta have whatever the amount is in your account. I haven't
Oh,
deal with that yet. I don't want to deal with that yet. And I recommend that you don't deal with it yet.
okay, that's good to know. Because
If you do deal with it, let me know what happened. I would like to learn from somebody else, but if it's a good company and you have it in there, let it go. You know, maybe you want to. Like, I got some companies that I want to exercise on, but I got to make sure that when it's time, I'm gonna just let the expiration go, you know, but I'm gonna just make sure I got enough to cover it in there, you know.
got it.
The next one is Baba, Alibaba. This one I already know this one might be too rich for me and y'all, but because yeah, I don't know if I want to. I'll just mark it up, but I don't think I'm gonna look out for Baba. But here's our draw on the weekly. We almost took it out already. So this is highest probability that we take this out, even if we get a retracement. This is a previous monthly high. If we get a retracement, you can see, yeah, we got see this monthly candle too strong. So we probably not gonna, even if we retrace, I don't think we take out this low before, we take out this high. So that's why this is still the primary target. So at some point, it looks like, if we do get a contract on this, our most short-term goal should be this high. So and that's, you can see it on the weekly, you can see it on the monthly. Now all we got to do is just set up where we take it out. But this, I hate when we see gaps like this, but the only place I'm seeing any logical explanation is just that it holds inside of this range that is already in right here. And I just don't like the way this looks. So I'm probably going to leave this one alone. I don't like the way this looks, but
May we look at Apple?
yeah. Oh my God. I think I've been recording and I haven't been screen sharing. So part of this video is going to be gone. So I'm sorry.
It's not recording.
I could see your screen.
Oh, okay. All
Yeah,
right.
you are recording.
Okay. Let me go back then. I don't know why I thought that. Hold on. Make sure. Okay. So I like this low. This previous day low. Yeah, I don't know why I thought that I wasn't recording. I don't know. I don't really like bye-bye right now. Like, I think we could definitely take this low. I think that maybe we hold inside of this range and then still take this high. That's all I can really see out of this. And then maybe we push up. If we already rejected now, and then likely we push up if we get, a run up and just hold his range. That's kind of all I really see on bye-bye. And you see their earnings coming up in about 60 days or so. They should probably beat. So if we do catch something, we will be good though. I think we do catch something, but I don't know if we're gonna see a good contract. So maybe we'll go short contracts with these with bye-bye. Look for a contract that's out just after the earnings release. Earnings is on the 19th, so 13th. So let's see what this 21 contract. Okay. See, yeah, this is too rich for me. I would have to go for the 195 contracts. That would be 620. Nah, I don't want that. What about the one just before? Yeah, nah. Hold on. Yeah, I'm gonna pass on that. Yeah, that was I like the setups, but the calls are a little too rich for my blood. I think that we get a good run, but I'm gonna screenshot it anyway, and then I'll let y'all make the decision on this for yourselves. And then here is the chart for this one. Bye-bye. Okay, I think I got a couple more. I'm just gonna look at the ones I like.
Before you move ahead, can you check my screenshot? I just sent your new after that
You
in
see?
chat.
in the chat.
Yeah. When you send new, after that is my screenshot.
Let's see this.
Yeah. So I don't know, like this $8 is below that 7.04. Why?
It's just because of the you see this arrow right here?
Yeah, a strike price.
Yeah, that's why it's below. If you click that, it'll look the same.
Okay.
Yep.
Mhm. Okay, for call and put, right? We need to change this. Is it like that?
What do you mean?
Means it was downward, right? So now I change that. So what does it mean? Why it is like that?
I'm not sure what you mean.
This arrow, right? It's like this is downward arrow, right?
Mm-hmm.
So you said because of this, right?
Yeah, this basically this would show you the calls and the puts that are in money. This show you the calls and put out of money. Even if we had it like yours, that would just mean this is in money down here. That's
Mhm.
out of money right here.
Yeah, but $8 was above than current price, right? But still that was down.
Yeah. Hold on.
Mhm.
Current price 704.
Mhm.
Our strike price that you were talking about, which expiration?
May 15, 26.
Yeah, so what you mean?
So if you will change that strike price like arrow upward, yeah.
Mhm.
So 8 is going down, right?
Yeah, it's just because just
Okay,
because
okay, got it. This is like a
yeah, you just got
short.
the
Yeah.
opposite way. But
Uh-huh.
that just means that these contracts are in the money down here.
Okay.
Everything above the strike price is 704.
Mm-hmm.
It's in profit, in money already.
Yeah.
This would be below the strike price, even though the screen is showing it above it,
Mm-hmm.
how it's ordered on the screen, but these are actually out of the money.
Yeah, got it.
So you want to see this?
Thank you.
Did I drop Baba already? Yeah.
Baba, yes.
Okay, so the other one is Mm, hmm. We just took a high. Mm, close inside of this candle. Hmm. Monthly looks okay. The monthly look okay, but don't really care for the weekly unless we're gonna hold high, close inside of this candle. So that means we 50-50 on this. We could probably go in either direction on this. Because we got this gap that is already traded down into. I hope I'm not boring y'all.
No, you are not.
No, not at all.
Yeah, I like this, but we kind of in the middle of the range right now. And we just took out a high, so I don't know what. I would need some more information on this one. I would need a little more information because we could go kind of both ways on this. Because the range high is here, the range low is here, and we close basically in the middle of it. So it's not really a direction. But if we do go up, that's my target. If we go down, this is my target right here, middle of this area. And that's all I can pretty much say on that because I don't have doesn't really have a strong direction right now because we just kind of ranging. And all we did is range between this area, came out of the range, and now we're in this smaller range. So that's pretty much all I'll do. I'll go over Apple real quick. And then we can go into the futures. I don't even have contracts for this. Not even gonna look at contracts. Let's go Apple. Not the one. Apple is at the yearly. We just took our highs. If we stay strong, this is our target. Don't even have to go off of this chart, looks like, because it looks like that's the most recent point of interest. So this is the monthly high. If we do get a retracement, this whole range pretty much we could come back into. We got this gap being the most viable area. But kind of like this whole range right here, from here all the way up to here. And I think that we could hold anywhere in this side of this range, but specifically this middle, because that's where the yearly is. And usually we already above the yearly. If we gonna come down and hold somewhere, is highest probability right now is that we hold above the yearly. So this, I'm gonna put an alert below 251. That's to take out this most recent low we made on this candle. So I would like to see us take that low out. And then I want to see how we respond to that. I do like this setup. Now we need to see if we're going to get a good contract price. So a buy below 251, in between 245 all the way to 248 on the yearly is best case scenario for me. We come down, we hold somewhere right around this area, we take out this high, at least is what I'm looking for. If we do a shallow retracement, we hold somewhere along this area and we push up. And then the last option is, of course, we just run up. We just go, and they leave us and we try to buy this high. I don't want that to happen, but that is a possibility. And we just go ahead and take the high. If we do get above this, I think that really I think we could go, because I think we at least get to that 270 area, because that's the next big whole number. And if we look at the weekly, let's see what is up there, that 270 area. I don't see nothing in the short term. I think that's all-time high area. It looks like, yep, that's new all-time high if we jump above this. Yep, yep. So if we take this high out, this actually an all-time high. So we make a fresh all-time high if we get in there, get above that high, which Christmas probably will definitely probably take that high out. So it's Christmas time, Q4 time. So I really think we could be aiming for that 300 price point. 270 just a short term, but I think this 300 is the biggest whole number. So now let's see what contract. The hmm, all of these are going to be expensive. Earnings is on October 23rd. We do have the October 24th contract. So this is probably the best one to play off of. You see that 270 price that I mentioned? Look how much volume is right there. And it's not that bad. It's only 170, 171 or 150. So you can get it for anywhere in between that. So right now, my eyeballs are sitting in that 270 price point. Because basically what what this is telling me is that most of the volume and most of the people that are looking at this are seeing the same thing I'm seeing. So they like that price point of 270 to hit. So let's go ahead and I'm just gonna go ahead and say we are gonna look at that 270 one. Can I get
So I am thinking of doing this like gold and just swinging it in my FX account. But I just got to get the right entry.
yeah. I like this for a short term play.
Yeah, I would just swing it to 280.
Yeah, I like this for a short term play, like especially since we got earnings on the 24th. I would even say go into like the November contract. That's 380, 380, or the week after. You could even go to this 280 contract. Let me clear this dry. If you want to go a little further out, this 280 contract ain't bad either. And that's for the October 31st expiration. That's over here. Let me get rid of this. It's like that's only $134 for this 280, which I still think is good. So I actually like both of those. I like both of these. 280 or the 270. It's more volume at the 270, but I still think if we get above this 260, it's really nothing holding us back from 300 being the price. So let's go with that. All right, now let's look at futures. Let me clear this off the screen. Okay. Okay. So we'll start with dollar real quick. Dollar pretty much did what we thought it was gonna do. From the session we had on Wednesday. And it was pretty much like this high right here was too close to where we closed on Wednesday. So it was already like, hey, we probably gonna go ahead and take that high. We took the high and we even closed above the high. And I think we'll use this range to kind of hold us up and push us to the upside. So for now, it's looking like we just need to make a couple of minor adjustments on this. And then I'll add one more. Maybe holding this monthly. So this is probably still where I'm thinking we go to on dollar. Because now that we closed above these highs, I think even if just for a short term, I think we hold inside of this fair value gap that we had right here, that we just traded through, at least to try to take out this high. And now we made equal highs right here. So I think we try to take out these highs as temporary targets. That's last week high. This relative equal highs. I think we come after this before we make any kind of move to the downside. We still got a lot of liquidity left up here. We took this high out and took all this liquidity up in here, and I think this is the most recent. I don't know if we come down and try to take out the candle we made on Thursday. That's why I think if we do push down, we hold up inside of here. Worst case scenario, we try to hold up right around this area and then do something like this. If we were to sell off, I would want to see us do something like take this low out and then we come back up and trade down in somewhere in here and then try to sell off. But I don't see us selling off yet. I think we take this high out before we sell off. So this week, this is what I'll be looking for on gold. I mean on dollar. On gold. I don't have what we marked up on gold, but we kind of stuck in a little range. We got this low from Wednesday, and we got this high, which is an all-time high, a recent all-time high. Don't really have to make a lot of modifications on this, honestly. This is still sitting inside of the range we were looking at, but for a short-term look, we got this liquidity at this low. We just took out these highs, and we have this fair value gap from the daily that we sitting around. Maybe we want to hold up near this high and go ahead and take this out. Let me just double check a couple of things. Yeah, I think we already moving away. I still think this high is at risk the most, even though we in between the range between this low and this high, and we pretty much 50-50 on this. So that's why I'm kind of like not really leaning towards a real strong direction. But if you see the way we closed on Friday, that leans more towards us coming back into take out this high. So I will still say we take out this high. Worst case scenario, maybe we come back to around 37.92 from where we are, which means we rebalance this week. And, then we try to push up from there. So I'm liking this high that we just took out at 37.92. So I think that's what I will model the setup off of this week, where worst case we push down to 97, and then we got our high right around 38.24. So that means we probably looking at 38.50 as the next target up. Let's go 1 hour just to get a cleaner setup. I don't think we come pretty much too much lower than this. We got our 38.50 price.
Okay. So you don't even think we're gonna get like 3,700, 3,600 no more before we do the run, or
3,600.
yeah,
Chart's not saying it.
Chart's not saying it.
No.
Okay, so I'm gonna set an alert.
Yep. Chart's not saying it. This is our last swing from the daily, this high to low right here. Even if we come down right now, a 50% retracement, which we almost already made already, says 37.42. If we get in the golden area, our kill zone is still 37.25 to 36.95, or basically 3,700. That means we come back into this inverted fair value gap, which I hope we do, because I actually would rather us come down into this range that I got marked off already.
Yeah.
So if we get any, for this to happen, for us to come back down in here, we need something that's going to drive the dollar up more. And if based off of what we're looking at, it does kind of align with that being the case, where if we go ahead and trade into this range, that could be the catalyst we need for gold to push down into this range. So that could be a setup, but right now we just 50-50 because we kind of stuck in the middle of this low and this high we made over here. That would be nice though, because if I'm selling, if I'm looking for a longer term buy on gold, I do want to see these get swept, us come down into here, and then we buy. For our setup Monday, Sunday into Monday, I think we hold here inside of the range. If we get a trade outside of the range, then we can go ahead. So what I'll do, I'll say this is my overall setup. This is what I want. Right? That's my overall setup. I'm cool if we do this. If we do one of these other moves, I'm cool with that. Overall, I would love to see us sweep this, come down into this, and then we move from there. And then we start targeting higher time frame. We get 38.50. Let me go back. If we looking at the other targets, right? We would have had this as our first target, -27, 38.68, or pretty much 38.70 area. And then after that, if we add in our 50%, our 50% pretty much line up with 3,900, which is right around here. So let me add that one on too. -50%. Where you at? It's just you. Which is right here, pretty much right around 3,900, like I said. And then the overall is basically saying we hit 40. The overall says 39.88, but that's pretty much gonna line up with 4,000 for the most part. So if we get a longer term move, that's what we'll look at. But for this week, we got basically either we push up, take this high, push down, hold in the range, then take the high, or we push all the way down, jump into the kill zone, and then move up from there.
Makes sense. Thank you so much.
YM. Our move for last week was, hang on 1 second. Okay, sorry about it. Last week we were saying that we should push up, and this was Wednesday. Wednesday on the indices kind of just dumped overnight. I thought we'd at least try to really get inside of this fair value gap right here. And we talked about it, right? We kind of talked about it on a call on this, and each one of them had this same gap on NQ, YM, and ES. And I thought we would at least try to pierce it because I thought we might want to go to the weekly, but you can see this was the 10 o'clock, this was the 2 a.m. and we just really just dumped. And we did trade down to to this fair value gap, and we could have caught a buy from there, but when we got down in here, we did actually try to sell right here, which I thought we'd actually go ahead and try to take this out, but it reversed. And we finally did go into that fair value gap. So this one is looking. I'm still liking us to come into this area if we continue up. If we push down to the downside, our risk becomes this low. And this was last week low. Because we closed inside of this, our short term is this high. Our recent high was here. So I would assume that before we do anything, we try to take this high out, see how we react to that high. Would probably be my first aim, is to see how we react to that high. That's a previous daily high, right? And because we closed near this high, so before we could take out another high, we got to deal with what's going on where we are, right? And where we are, we got this high, this low, right? This low is inside of this fair value gap, and this fair value gap has been inverted. So now this fair value gap that got inverted, it could go either direction. This could be used to continue to the sell side, or this could be used to continue to the buy side. And because we got this as the most recent area, this is probably continue to the buy side. If it's not, then you need to see that this get replaced by a new fair value gap to the downside. So that's why this is first. We trade back into here, see where we go from there. If we get any new fair value gap to the downside, that should be giving you this setup right here to go ahead and push back down. But we need, I went over it last week, right? Where, whenever you get a bullish fair value gap and they don't use it, you need to see it replaced by another one. So this one got replaced by this one, right? And then once people try to use this again, if people try to buy this again, they got taken out to the downside. This one also, this little one right here, right? This one got also replaced by this one, right? When people bought, they thought it was going to buy up. When they got to inside of this range, it sold off, right? So you want to see, every time you see a down one, you want to see the opposite one replace it. This one, if you were looking to sell in here, which a lot of people would have been, right? Once you came back in and made this low, people were like, oh, it's going to sell. It tried to sell. It doesn't sell, right? Then a new one gets, a new one, the new one replaces this one with the bullish one, and now it's pushing up to the upside. You want to see symmetry, right? This one, downside, try to sell off, can't make a new low. It gets replaced by this one. And then we try to sell off. We hold it. Another one, we already talked about it, and this get replaced. So now, this one already been traded through. We traded through it right here. Now we need to find where the fair value gap is that going to replace it. It is something on the 1 hour. There was one right here. There's a little one. And then this is going to be an order block once we trade above it. So we can still use that to kind of push it to the upside too. So that's definitely lining up with our scenario, with our setup. So I like this setup. So from here, where we are, we either push down, trade below this, use this to take us further down, or we trade above this high, trade into this body, use this area, and we use that to push up higher to aim for this high. And if it don't do none of that, you don't get a trade set up. You just wait for one of the charts to do what you want it to do. The NQ, same thing pretty much. So Wednesday, again, we had this fair value gap. You trade into it overnight, got to this high in the midnight candle, and from midnight until all the way until 9 o'clock in the morning, we dumped. We hit the target at this order block, and we held, right? And remember, I told y'all once we got to this, we probably won't be selling off because this low is pretty stern. So that's why this order block was highest probability that we come into. I thought we would come up higher because we had the weekly, and we were already running low liquidity runs into this, but we didn't. We just sold off overnight, and that's okay. You know, that's all right. Wednesday and Thursday were kind of choppy anyway, so it was kind of janky. So it's 3 setups I'm looking up on these in NQ. Either we just take this out, trade below, we try to take this low out. That's the one that's the lowest probability for me right now. The next one is we trade up into this fair value gap right here, which is near last week's open. And we sell off from here. Then the last one is we don't do either of those. We push up, trade into this, try to sell off, but then eventually use this to go higher. And this gets inverted, and then we try to take out this high and then this high. So those are my setups on this one. That's kind of the best way to look at it because this is the highest probability as we are closest to this high right now, as compared to us already moving away from an order block. This is the next high right here. Then we got our all-time high. If we get above all that, a new all-time high is what we look for. So there's 3 setups. Not a lot needs to change because we still inside of this gap, and this fair value gap that we had on the daily, and we still holding it. So this is still in play, right? So we went from this high to this fair value gap in this order block, and now we're trading away from it. So that's why this is highest probability right here, because we already moved from something bullish. Now we need to go to our next bearish thing, and that's this and this right here. So that's where I'm getting my bias from. This is YNQ. Last but not least, ES looks pretty much the same. We had last week on Wednesday when we went over our midweek, we were inside of this. We sold off mostly overnight. Came to this order block. We tried to sell off a little harder than NQ did, but we stayed inside the body of the candle. It looked like we were going to keep going, but then we just pushed up, traded back inside of this fair value gap. This fair value gap at from the daily. No, from the hourly, because I liked it the best from the hourly. And then now we trading away from it. Now that we trading away from it, we got this gap right here that we can use to go up higher or sell off from. Or we got these highs right here that we can target. Let me get rid of this stuff. And we already pretty much got our setup already, because I kind of did this one already. But if we sell off, we need to trade through this order block. And we need to see that we try to use this area to sell off again. And then the first target would be these 2 lows right here, where we got this previous week low and this previous day low right here. That means that we sold off, we inverted this, we traded through this area, and now we try to use this range to sell off again. And then we'll need to target this low first and then this low. I think right now, the last highs we had was this high, and then the high we made, and then these highs. So with us closing and moving away from a bullish point of interest, I think we need to find our next bearish point of interest, which is this range, this high, and this high. So I see us pushing up. And if we push up, main target is this high. This target is also sitting inside of a bearish point of interest where we can sell off from. So that's where us moving up to this range and then selling off comes into play. Now, if we do sell off from here, do we sell off strong enough to start taking out these lows? I'm not quite sure, because we could use this area again to go up higher. So you could see something like we push up to this area, sell off, and then try to buy again from this area right here, which is a possibility. Or we push up, we get inside and above these highs, and we get in between this range between 6744 and 6718 and try to use that to continue up to take out this high. Those are the options that I'm seeing on this. And it's just a matter of which one you see that is holding inside and responding the best way to the charts. What I've been using a lot of late, even though I haven't traded a lot lately because of the past 2 weeks, it's been really busy, but I've been using divergence, where I wait to see what the last high on ES does as it is compared to YM and NQ. So if I see a low get taken out on YM, but if I see a low being made on YM or NQ, and I see a low being made on ES, but NQ don't take out the low, and ES does, that's probably a sign that this about to go up. And it worked the opposite way in Q or ES if I'm looking at it the opposite way. If I see a low or a high, they need to be doing the same thing. And if they're not doing the same thing, it might be a sign that you might be getting something triggered in the opposite direction. So this is. And then the last thing I'm going to do, I'm going to just do a quick little bias lesson right quick, because I think that's the biggest thing that people be messing up on. And the reason why a lot of trades get lost is because of the bias thing. But if I'm coming into the charts, right, and I'm looking at this, right, the first thing I need to do, I need to find where my range is. What range am I operating in? Where's my last major low and my last major high, right? My last major low is this low right here. Let me see. Is this low? Oops. My last major high is this high. So with that being said, right, my next thing is, where is the last high they got taken out? Where is the last low they got taken out, right? The last high they got taken out was here. We don't have any highs get taken out. The last high we made was up here, right? The last low we made was down here, right? The last time we took out a low was right here. So if you looking at this, we just inside of the range between this range, this high, and this low. So if this is Friday, I'm sorry, this is Thursday candle, where's the high on Thursday candle? That's right here, right? Where's the last low? The last low on the daily is this low right here. My question is, which one, and I want a response to, but which low or high is the most likely to get taken out?
High should take first.
Which one?
High.
The high.
Daily high.
Okay. Somebody other than Anna.
You know what? I was gonna say this low right here, but I agree with Anna right now because we're already going up. So yeah,
Yeah,
I say the high.
yeah. That's the
Yeah, I
last.
think the I too.
Okay. That's the last close, right? The last close was, oops. The last close is right here at this price. So where we got our last close is closest to a high we made that was right here. So if this is the closest high, we're probably going to take out this high before we take out this low, right? So unless something changed, where should I be looking for trades? What direction?
Buy first.
Buys.
Buys, right? And even if we do get a trade to the downside, because we got this big body, it's probably not going to take this low out right here. So since we got that situation, we need to say what inside of this candle would hold us up, that if we sold off, we would take this high out next, right? So that's where you got to start looking. So just let me clear this off, right? So I can already see a couple things, and that's without having no drawings on this, right? If this is the high that we want to take out, because this that same high,
That's small. There you go.
this is that same high we looked at, right? This is that major low we looked at. And then this is that short-term low that we looked at, right? And if this is our target right here, I see that we can hold up inside of here. There's this fair value gap. And then just worst case scenario, there's this huge order block that's taken up by this whole area right here. So if we sold off, we probably gonna hold here or here. And if we go back to the daily, that price point on the daily is on the inside of this range. Sits right here, right? So if we try to hold up, and our first area interest should be to look inside of this range if we start trying to sell off and buy, right? But then we also have this fair value gap from before that also overlaps with this. So that's why when you see I just drew it all the way down, I'm talking about this whole area, right? So even though the arrow is going up from here, it could also be going up from here too, from right around here too. So when I'm saying this buy, I'm referring to this area down to this area. Anywhere. And you could get a wick outside, but the main price action should be within that area. So on this Friday candle, this is like the area we would need to look at if we wanted to get the best price to buy up to try to take it for a longer term run. We need to look at those areas, right? If we were looking at something that's selling right now, I think gold is a good example. Who's selling right now? No, dollar's not selling. Dollar not selling right now. Let's look at this chart. I think EU is selling. Cool. Right. So if I'm looking at EU, and this is just a random chart, right? First, what's our range? That's this high. Just the last major high. Last major low. If you want to go intermediate range, you can look at this high right here too. So this was Thursday. This is a huge candle to the downside, right? And this one was too, right? And this was Thursday's high, right? And we pretty much closed in between Thursday's high and Thursday's low on Friday. Given where we are right now, where we have a high here and a low here, what are we most likely is now? What's the probability of us taking out this low versus this high? Between 100 and 0.
50%. This is 50% because this is in between, right?
I would say about 70% I'm leaning towards.
Of what?
Of it taking out the... Actually, I'm gonna say 50-50, but I see it going up or forming a bullish candle going up.
Yeah, all right. It's 50-50 on this.
Yeah, but there is FVG also, so maybe it can go till there and then turn down.
Yeah, this is a 50%. And it's 50% because it closed in the middle of this candle range, right? And we already took out a low. So we took out this low, we set a new low, and now we like 50-50. So on days like this, we can go either direction, right? Because we already got the means to say, hey, we are pushing up. We do have a strong candle on the daily, but And it'll give us a move on the lower time frame too, because there's probably something on the lower time frame. So we go to the 1 hour, got this order block, this little fair value gap, but we still got this fair value gap right here. So we would have to deal with this first. So this is giving us a bullish candle on Friday, but before we could really say we were strong to the upside, we would have to deal with this. No problem, no problem. And once we deal with this, we can truly get a good direction, like as to where this is going. So we would have to still stay to the downside on this, even though it's a 50-50, because if we got into here and we trade through this, then this is at risk. If we got in here and we reject it, then this is at risk. You have to still be bearish because the last 2 days, which you can see on this candle and this candle, were bearish. So maybe we come in here, set the high here or set the high here, come in here and try to sell off from there, right? So your main thing is you want to look for these big engulfing candles, because a lot of time these big engulfing candles on the daily will give you some insight on the lower time frame as to where we're trying to go. So we got this engulfing candle. It took out lows here. This engulfing candle, it took out lows here. Now, once you get something like that, you got to be asking yourself, like, if I got this huge candle and it took out lows, what's the probability of us taking out this high? It's low now because we closed all the way down near here. So on the next day, I should be looking for how can I get price to push up as high as it can so that I can take the best sell on this. And if we were doing that on Thursday, right, this was the candle close on Wednesday. On Thursday, the best price that got offered to us for a sale was right here at 6 a.m. And that price was 1.1754. If you don't catch that, then you got to set up below this low or below these lows to take the setup. So, and just like we had over here, right? If we were going to look for a sell and we see when we take this high out, there's a fair value gap. Where is the best price for us to sell once it come back in there? And you got to kind of look for these things on the daily chart and line them up with the lower time frame charts, right? Okay.
Mm-hmm.
Got it.
Cool beans. Cool beans. All right. So, with that being said, I'm starting to lose my voice. My mouth dry, and this food I've been trying to eat while I've been on the phone with y'all, it's been cold, but I've been eating it anyway. So I'm gonna send y'all the recording once I get done. I'm gonna drop it in the Facebook group, and then if I can get this notebook LM thing to work, I'll show y'all next time we get on.
Okay. Thanks, Corey.
All
Thank-
right.
Okay, thank you.
Peace out.
Mhm.